which also is called as a mock court, where we have a mock proceedings of the tribunal, which will be displayed here. To just give a brief background, last year at the RRC we had introduced this concept of mock tribunal, and all the participants had really appreciated this, and therefore this year also we had decided to keep this concept in our papers. Basically, what we do, the same case study which the paper writer is going to present, we ask the group leaders to present it from the revenue's point of view as well as from the SSC's point of view. Normally, whenever we prepare our cases, we need not only see what it is in favor of the SSC, but we also require to see what are the decisions against the SSC, what are the arguments which will be put forth by the revenue. And this is an ideal place where we will be able to see both sides arguing the matter, and thereafter the paper writer will be able to put his point and present his paper after hearing both the sides. Friends, to have this mock tribunal, we have two past presidents, Shri Vipul Joshi and Shri Mahendra Sangvi, as a judicial accountant member and as a accountant member. With this, I request Shri Vipul Joshi and Mahendra Sangvi come on the stage. Friends, as we are replicating the proceedings of the tribunal, I will request all of you to maintain the decorum of the court. Please switch off your mobile, and when they enter in the courtroom, please stand, as we all can have a feeling of a mock tribunal. We will be calling the case study group one by one for presenting their papers. We will start with the case study 1. The SSC's representative will be on my left hand side, and on the right hand side the departmental representative will be.
Case study 1.
Your Honor, before you start, I just there's a paucity of time limit. Assume that the judges have read the facts, read the briefs, to start the argument straight.
Thanks, Your Honor. So the case number 1, Your Honor, is actually the issues raised by my assessee, which is appellant. First is the disallowance of proportionate depreciation. Your Honor, as per the facts which you already pointed over, is that there is an asset partially which has been used by the appellant for his personal purpose. The learned AO has made some disallowance, which has been confirmed by the learned CIT. No, my objection basically is not to the principle of disallowance. I am only saying that there is no clear-cut mechanism for making the disallowance on a proportionate basis, because as a fictional block of assets, the asset with respect to which he has proposed a disallowance has been subsumed into a block of asset concept, block of assets. And once an asset goes into the block of asset, I really don't know which asset lies where, what is the value of it, what is the liability of it, how much is depreciation on that, because I compute the depreciation with respect to the entire block. So in the absence of a provision, we say that I will make a disallowance of the depreciation with respect to the block. Today's depreciation, today's disallowance provision with respect to the asset and not with respect to the block. So in the absence of a specific provision, specific mechanism, disallowing a depreciation on a proportional basis from the block, the provision maybe is not ought not to have been placed into service, as far as my case is concerned. That's number 1, that's the first proposition. Proposition 1, considering the limitation of time, I just make the propositions and leave it at that. The second proposition is that if at all the disallowance has to be made, considering the phraseology, typical phraseology of 43 surplus 5. WDB, that much depreciation which is not actually allowed to me. My WDB will be enhanced to that extent. The finding will be enhanced. That's about issue number 1. As far as issue number 2 is concerned, it's a very interesting issue also. Is that the learned AO has disallowed the benefit of loss carry forward to me with respect to a short-term capital gain on the depreciable assets. Now this issue has been go through before the various benches, before the various courts. You kindly appreciate. Let's take a general example. I have got an asset of let's say 1 crore rupees. It's a building and I use it for 10 years for my business, for 15 years for business. Now my WD of that building is less than 10 lakhs rupees. Now I sell that dilapidated condition building for 80 lakhs. So there's a gain of 70 lakhs, which I completely agree. If we go to section 50, I get an answer of 70 lakhs as short-term capital. But you almost in reality, what is it? It's nothing but recoupment of depreciation. The depreciation is earlier being charged from a business income. So the recoupment of a business expenditure should lead to a recoupment of business income. The business income per se. So it should go to a section of 41 balancing charge. Earlier we had a provision of balancing charge under terminal depreciation. Both these subsections were removed, sections were removed, and a holistic provision of block of asset was introduced. The purpose is only limited, an easy mechanism. So easy mechanism should not change a business income character or a business income profile to a capital gain per se. It has to be understood only for the limited purpose of computation, which has been so in the various business or easy industry. So therefore, the character still remains a business income, therefore the loss is allowed. And we have got series of judgments which take a view that every income should wear a badge of trade or a badge of commercial excellency on the receipt which comes in that income. So if this money which has come to me as by selling the buildings is linked to commercial excellency, then this is nothing but my business. So that's as far as the second issue is concerned. The third issue is rate of tax. Now assuming for a moment that this whole thing goes to capital gains. Still, the facts do tell me that all my assets are having more than 3 years life. They have been resting into the block is a phenomenon. But yet, the long-term character as per section 242A is not eliminated. So therefore, if we independently do 242A, there is still a long-term capital asset. Now, section 50, though it starts with the phraseology that notwithstanding whatever contained in 242A, for the purpose of 48 and 42, these are special mechanisms. So it doesn't really override with 242A. Therefore, we have a series of judgments, leaders, and then up to Perry's. And now recently, the Supreme Court case in the case of Demco Holdings, which say that even if the short-term capital gain is there after depreciable asset, still it is nothing but that 54E and 54EC benefit available, which is for a long-term capital asset and long-term capital gain. So therefore, that benefit ought to be granted. And the last point was, sorry, I should have taken this point third, because the last point is a character check, but for the indexation, which is again quantification. So you see as an issue that the learned has not granted the indexation of an asset for which I have not been claiming depreciation for the last 5 years. Now kindly consider a practical case. That suppose I own a building and I use it only for 1 year for my business. And thereafter for next 24 years I am renting it out. And after 25 years I sell it. Can a fictional embargo be applied in service and be said that once you are in block you are always in block? The moment I seize an asset for being used for a business purpose, that very moment it comes out of block on a fictional basis. And the moment I am not carrying any business, it becomes my investment asset. And therefore from that day onwards, it should have been allowed to me it should have been capable of being eligible for indexation benefits. Because it leads to a practical difficulty for us. How is my case different than a person who has not rented, who has not used his asset for first year, and he also holds it for 25 years like me? Then I'll be deprived of the similar benefit like that. It will lead to a discrimination. So therefore, the section ought to be so understood that the indexation benefit ought to be made available to you. These are the conditions. Thank you.
The first is personal usage. There is no mechanism to reduce WDV. This is also depreciation. How do you get section 38 subsection?
The phraseology we use in that section 43 is that the WDV will be the opening WDV and the assets, cost of the new assets, less depreciation actually allowed. So if it doesn't allow me the depreciation, if it disallows some part of depreciation, it's not actually allowed to me. Therefore, WDV ought to be enhanced.
Section 38 subsection 2.
It says only that depreciation will be restricted. There is an issue of restriction. The moment he restricts, he is not allowing to be honest. It's the other side of the same coin. So therefore, the moment he restricts, he automatically enhances the
in any case law supporting the proposition.
You almost person this, I couldn't lay my hands on that.
And about the last issue regarding stoppage of business purpose, usage of asset
Yes.
for the purpose of business,
Yes.
how do that remove it from the WTP? You start using for business.
Yes.
How to remove from the business?
This indexation issue you are referring to indexation? Indexation. This is my pointer actually. This is my sort of a hardship which I am explaining. That I'm purposely taking an extreme case of a year one in which I am using the asset for business purpose. And then from year two I am not doing any business. I am just renting it out. For the next 24 years it is rented out. Then the year 25 or 26 I am selling it. Can it be said that therefore indexation is not available to me?
Any case law supporting that?
On this also I don't have a case law, but my hardship can be seen by yours.
The first point taken, sir, is section 38 subsection 2 specifically provides for proportionate depreciation, and it has used the word depreciation. So section 38 2, keeping in mind proportionate depreciation can be disallowed. He said, my learned friend said that calculation is not possible. In the given case, there are 3 buildings, B1, B2, B3, and each buildings have separate values and etc. It is possible. Mechanically, we can do the calculation separately, and it is not something which is practically not possible to calculate the separate things. I'll also rely on the I'll just read section 38. Where any building, machinery, plant or furniture is not exclusively used for the purpose of the business or profession. Deduction under I'm just reading further. Clauses 1 and 2 of section 31 and clause 2 of subsection 1 of section 32 shall be restricted to a fair proportionate part thereof which the assessing officer may declare. So it is possible in this given case. I would also rely on the judgment of special bench of Chandigarh, Gulati Sari Center, when it has been said that even after the introduction of concept of block of assets, the provision of section 38 to continue to apply, and the assessing officer is empowered to restrict depreciation to a fair proportionate basis. Section 38.2 was also amended in 1986 after this block of asset concept came. So the provision of section 38.2 have to be read harmoniously with the amendment made in section 32.
How do you compute disallowance?
How to calculate? So
Compute that portion of disallowance.
we can go into the detail of those 3 buildings, B1, B2, B3, and we can find out what was the date on which this building was acquired and how many years the depreciation has been claimed. And we can separately, individually work out. I'll just cite an example that recently this electrical equipment fittings were segregated from plant and machinery. So when electrical fittings came from plant and machinery segregated, we did, the SSS did calculations separately for plant and machinery. So the rate of depreciation earlier was plant and machinery 15%, then electrical fitting 10%. So it is possible, even in this case, that you go and look into the cost of building, B2, and basis of that.
He would not have kept the records. All these records would not be available because the block concept method is there. These records are not available.
In the given facts of the case, I feel that this is possible. In the case where it is practically not possible, I will agree with your view, sir, that in those cases it may not be allowed.
Okay.
But in the given case, it is possible.
As regards that stamp duty value of 50C, do you have anything to say on that? Would it be applicable provisions of 50C?
Before going to 50C, I will take up one more issues which he has taken up. That section 50.
I would request you to be a little brief.
So regards 50C, I would agree that section 50C would apply because of special bench judgment of United Marine 130 ITD 113.
citation? What is the citation you said?
130 ITD 113 United Marine Bombay Special.
Yeah.
As regards 1 crore, he said that 41(1) business character would apply because of specific provision of section 50. 50 is a deeming provision. It says for a very specific purpose it will be deemed as short-term capital asset. Since it is deemed as short-term capital asset, then it cannot have the nature of business income, and the brought forward loss has to be taken as capital loss only. And section 72 is very clear that only brought forward business loss can be set off with business income only.
Any case for supporting the proposition?
Mr. M. Raghavan versus ACIT, Madras High Court, 266 ITR 0145. The indexation case, in case of indexation cannot be allowed. He said that indexation should be allowed. In my views, indexation cannot be allowed because the provision of section 50 says very clearly that it will be deemed as short-term capital assets. Once it falls in the block of assets,
How will distribute? He is relied on the Supreme Court case matters. How will distribute?
for indexation,
Yes, Builder.
Ace Builder says, sir, Ace Builder says that for the purpose of section 50, mode of computation would be for computing short-term capital gain, and you have to rely on section 48 and 49. So section 48 itself says the indexation is available from section 48. Now because 50 will govern, Ace Builder doesn't say that section 50 would not apply. It says that for the purpose of mode of computing capital gains, till the time you compute capital gains, section 50 will apply, and that includes mode of computing under section 48 and 49. 48 and 49 will be replaced with section 50, where it will be considered as short-term capital asset. So there is no question of allowing indexation. So Ace Builder does not allow. It goes that after computing capital gains, short-term capital gain, under the head income from various sources, then you can go to other sections, etc. Till that time, you cannot go, and section 48 would be hit, and indexation benefit would not be available. And Ace Builder is talking about 54E and those other sections, not talking about 48.
Yeah. Any other issues you want to take on?
Rate of tax is said that it's
Only left is not rate. Do you have anything to say on the rate of taxation?
regarding rate of taxation, he said that it should be allowed, according to me, because of specific mention in section 50, that should be termed as short-term capital asset. The rate of tax should apply only on the basis of short-term capital asset, and not section 1.
Okay, we shall consider. All right.
Maybe only one requires, only one, not more than that. Because he has not made the point of WDB. My only point is that actually allowed there should be proportional enhancement. It's automatic inbuilt in the law. The first point. Because he also referred to that.
That's not a ground in any case. That's not a ground in the case.
So therefore, it's an essential follow-up of the same proposition. Because the second point was indexation. There he is relying on Ace Builders. So here is a point to us. By reading the Ace Builder, by reading the DENSO, by reading so many other judgments, we come to the answer that the result of that section 50 is still that the asset will be a long-term capital asset. And the 54E is available and 54F is available and all that. Now my point is yours. Once the asset is finally considered as long-term capital asset, then the indexation is automatic, because Manjula Shah decision of Bombay High Court tells us that everything is a formula, everything is a portal by itself. Therefore, it has to automatically be granted to you. And the last point is almost that rate of tax is also depend on the same thing.
Thanks. Yes, yeah.
This is a case where the client's reassessment has been made, and we are challenging the validity of reassessment. There are various grounds on which I am challenging this reassessment. There are at least 4 or 5 reasons why this reassessment is not valid.
You're challenging the virus.
Validity of reassessment. The facts are probably known to you all, just to brief in nutshell. This is the second reassessment as far as assessment year 10-11 is concerned. Earlier also reassessment has been done. And for 11-12, this has been reassessed again. The reassessment is being proposed now. The reassessment is done now. So in fact, I would take you to the one fact of the case, which is very relevant. I'll address this issue on 4 or 5 counts, the reassessment. The first and foremost, Your Honor, that both these years, assessment year 10-11 as well as 11-12, have been subjected to appeal. The diary has been formed during the course of the search, and one assessing officer has decoded the notings in the diary in a particular manner. He has also added few zeros out of that after that and made the assessment. He has held my client to be a finance broker instead of financer. And now the second assessing officer is now proposing to treat him as a financer.
That's fair.
Facts are the point. Now, Your Honor, the point is that this particular issue has already been subjected to appeal. Both the years it has been subjected to appeal. Assessment year 11-12 the appeal has been decided, and 10-11 the appeal is pending. Now, Your Honor, my point is when you go to the third provision of section 147, it says that in a case where the particular issue is already been subjected to appeal, revision or reference to High Court, then in such a situation the same issue cannot again be dwelt upon on the reassessment proceeding by the AO. This is completely on the basis of doctrine of merger. The order of the AO is no more solving, it has got merged with the order of the CID. No, one is subjected to appeal. One is pending. One is pending, the other is already decided. Now, if at all for this one which is pending in appeal also, if at all the department is having any issue on that, the department is very well allowed to travel to tribunal up to the order of the CID appeal is received. If the department is not satisfied with the order of the CID appeal, they can very well travel to tribunal. Why they will invoke 148? So provision to 148, very categorical, 147, Your Honor, may please be read, is very categorically saying that, should I read, sir?
What you are trying to say?
Provision says, Your Honor, that something which is already subjected to an appeal cannot be taken up again in a reassessment proceeding. So on this count, I think the assessor's case,
Even the order is not passed, CID appeal is not passed order, still it is
it is
government.
already before the CID appeal, a higher authority who is much higher than the AO, and therefore he is also having the power of enhancement, Your Honor. If at all he finds that there is something wrong in the order of the assessing officer, CID appeal is very much having the power of enhancement. And if at all thereafter the department is not satisfied, they can well travel to tribunal. On that count, I will challenge. The other is, Your Honor, when we see the facts of the case, we are told that the assessing officer has already decoded the diary and it has been extensively dealt with. Please mark that in the facts of the case it has been said that it has been extensively dealt with by the assessing officer. Now, here comes a new officer, he takes a new interpretation of the entire diary. He says that now there is a different interpretation. He is saying now my client is the financer and not a finance broker. Is it not a completely change of opinion?
Are you accepting the fact that for the reason given is that certain entries in the diary were not taken proper by AO? Are you disputing that fact?
No, I am relying on that fact. Facts like this, the facts are saying that on the basis of this, his assessment at 11 was framed, in which the AO extensively dealt with the diaries. So the diaries which have been found have been extensively dealt while dealing with the assessment order, the original assessment. The first paragraph, the 4th or 5th paragraph. Third paragraph is at this stage the assessing, you want me to read that? Third line of the third paragraph. I read it from the first paragraph. At this stage, the succeeding AO issued notices in the section 148 for both the years in June 2016. As per the reasons for reopening, income and expense assessment, as certain entries in the diaries were not taken note of, as the method of recording adopted by AO was not proper. Yes. Were not
Certain entries were not taken note of by the earlier assessing officer.
certain entries were not taken note. But here is a case here when the material was already with you. The diary was already with you. He has, in fact, there is a search, he has taken the diaries. It was available. Can the assessee be penalized for the inefficiency of the department which they have not done last time?